Well, hey guys, so welcome to another week of the UK property, or the UK and London property market update. I'm Brett Legwood, and so today we're going to have some bit of fun, bit of news, bit of predictions, and all sorts of things. So it's quite an interesting time right now because we really are at the crossroads when it comes to, effectively, we're in a recession. There's no doubt about that, but we haven't seen the unemployment rate jump massively. We haven't seen all these sort of things, and part of it is government sponsored. Part of it is that actually businesses seem to be responding and getting back on the track. And we've certainly seen that. I was chatting to a mate of mine who, and he works for New Zealand Tourism, and he was talking about the Chinese and how they're doing. And actually, their hotel staycation numbers are up higher than they were last year. So there's a lot of positive, but there's also the threat of negative. And I think the crossroads is that now with the UK, we're coming into a period which is normally a slower period. And I think, coming into winter, things are likely, I've had some really positive and buoyant news, but that may not continue. So I guess we'll see. But guys, just if you've got any comments, anything, make sure you type Q in the front. If you haven't, if you're watching this not live later on, then you can actually just send an email to webinars@gladfish.com and you'll actually get a response effectively alive. So, that's great. But guys, so let's get started. So we'll start off... Cool. So, Recession Watch. So, it's interesting. So, in this segment, what I'm doing is I'm just going to track the recession and just see how we're going with it and where we're going and what my thoughts are on it. I think the thing that's on everyone's minds right now really is this second wave and what's happening with that. And, if you look at the data, you'll see that it's kind of, it's a little bit scary that it's come back up to where it was when we had the lockdown. I mean, it's 6 months since lockdown. So, the first lockdown in March, it's interesting because I remember March 14th, I actually flew back to Singapore. I just made it in before the lockdowns and things like that. But, the interesting thing now is how bad this is going to be. I don't think it's going to be as bad as people may make it out. I think it could be tragic for a lot of businesses because they've survived the first bout and now they've got the second bout, and where, especially things like nightclubs and bars and pubs and all these sort of things, it might be the death knell for them, and we'll see. I've been saying for a long time, track the unemployment numbers. There's no new unemployment numbers out. There's no redundancy numbers out that have come out. They're not until, I think the start of October they come out in. And so we'll certainly track it on this show. I think, the key for me with this second wave and the impact of the second wave is really about what the government does, okay? How much they tighten it down. And I think part of it is how much the citizens and the people of the UK, actually adhere to this. I've seen in Singapore what has happened when you've got an orderly society that listens to the government, a government that makes sense, a government that explains why they're doing things, and sure has penalties and things like that for not doing it. But the reality is, by doing that, and by, we've been wearing masks when we're outside and that sort of stuff, unless we're out, physically exerting ourselves, jogging, running, riding, that sort of thing. And that really, I think, has had a positive benefit. So there's very low community spread, and there's good track and tracing, there's good testing. And I think the model is out there for success. And I think the UK, hopefully, they certainly didn't win, win the first round, but hopefully they can this time. And hopefully with the new medicines and the new treatments and all that sort of stuff, that'll work out. I'm optimistic. I don't think it's going to be as bad as it could be, okay? But I think it is going to need some stimulation from the government. And let's face it, that is why the government is there. And one of the things I've been saying for a while, and all landlords have been saying, is that, they've been picky on landlords, with these, not allowing evictions and all sorts of things. And I get why not, but then support the landlords, because there's a lot of tenants who aren't paying because they don't want to, because they feel they can get one up on the landlords, not because they are in any problems, yeah? So I guess the real question is, we're in recession, and we've been in recession now, which means 2 quarters of negative economic growth. The likelihood is that we're going to stay in recession. For how long? I mean, let's see. Is this UK recession expected to continue until spring amid COVID surge? Okay. So I think the reality is, and I agree with this, I think we're going to be in recession through the winter months. We've got the double whammy. We've got the lockdown now, or as we called it in Singapore, the circuit breaker, which is a polite way of saying pretty much lockdown. But the bottom line is how much and how long that goes on for will determine how the recession plays out. But then you've also got the winter, which was going to happen anyway. So that on top was going to slow things down. So when you add both those, it's a double whammy. And that could see house prices and unemployment and all these sort of things, really start to take effect and take hold, which they haven't really done so far. And I keep saying the government supporting, and I think, if we look at the government supporting, this thing here is basically, Rissi weighs up German-style subsidies, which is basically that as if I employ somebody and I've got enough work for them to work 2 days, but I can't keep them for the full time, then the government will pay the 3 days, and and it'll be a subsidised of some form. It probably won't be full wage. Similar to furlough scheme or flexible furlough they've got now, but they'll probably introduce a new scheme, I imagine. But it's an interesting thing because what I've noticed, and speaking to a lot of people now, it's not actually a lot of people who are getting rid of people have got rid of them. They're not holding on to them for the end of furlough, and I think that's one of the key. And I think that's quite interesting. So we'll see where that is. I see Paul has just written in that the COVID 307 COVID deaths this year amongst under 60s, even according to government figures. Epidemic, yeah, okay. Look, but the reality is that it could get, and I'm pretty sure there'd be more than 307. But anyway, I'm not sure. I'll have to check that data. But that's quite interesting. But look, I think the government stimulus and how they go about that, and it's not just stimulus, direct stimulus, giving money in furlough. It's how they get the building, the construction industry working. It's how they keep the hospitality industry, all these industries, and they are going to have to support them because if they want to keep the economy up and the unemployment rate lower, they're going to have to support them. So there's no real way out of that. So house price hotspots. Look, I think with house prices and hotspots, I mentioned it before, I think what we're going to see is we're not going to see the growth that we've seen. I don't think there's the level of activity. I think there was a real surge, but I think a lot of that surge, and what I've been hearing from a lot of the guys, is that it's not necessarily converting into sales. So even though there's a lot of property on the market and there's a lot of interest, they're still going to get mortgages, and mortgages are getting a lot harder. The hoops you have to jump through are almost impossible. I mean, we've got international buyers. International buyers are really struggling to get mortgages. The number of mortgages they can get has gone down. And really, it's one of those things where, I have to say, the whole game that they're playing is going to be an interesting one. But look, what do I think with house prices? A couple of news articles. Look, UK house prices surged to an all-time high after biggest monthly jump since 2004. 100% they did, And they did because there was the austerity layered with the Brexit, and then all of a sudden the government comes out and said, no, austerity's gone, we're now going to spend, we're now going to stimulate, we're now going to make things happen, we're now going to remove the red tape and roadblocks. So I think that's good news. And that's what's held it through, but I don't think that's going to necessarily sustain it. Now, obviously, you layer on top as well as that with the things they've done with stamp duty and the things they've done with the planning and all these sort of stuff. And you start to get a picture of why things, really just bounce back, And that, it's a great thing that they've done that, but do I think it's sustainable in the long term? I think a lot of these things are more people that have been waiting to get on the ladder are getting on the ladder, which is great. I think it's able to sustain itself enough that we're not going to see massive drops. I don't think we're going to see the 30% drop-offs unless some serious stuff happens. Trump gets re-elected and starts really going after China and puts the whole world in that sort of thing. There's a few things like that. We'll look at Trump a little bit later, but I think realistically, that job surge, will it continue? The house price surge, I don't think it's going to continue, but I also don't think we're going to see prices drop off massively. They could come off, but that's normal in the winter. Yeah. House prices, now this is one. House prices surge, okay, there's another article, but it could be hurt by job losses. Obviously, the interesting thing, a lot of people are assuming that because you're going to make redundancies, they're keeping people on until just before, and if you've got over 100 redundancies, you've got to give 30 days warning to the government effectively. And I think that's one of the challenges But I don't think that's the be all and end all. I actually think that most businesses have adapted to a new norm, and as long as things stay okay and the government keeps them things moving, then I think we'll be okay. That's my go. And it may sound very optimistic, and I know there's a lot of people out there going, no, things are going to drop off the face of the earth and all that sort of stuff. But the reality is banks were cashed up before this. Their reserve requirements are cashed up. They had effectively too much cash. Well, not too much cash, but certainly what the last recession, they could survive that. But I think the other side of it is that there's a lot of the stimulus happening. There's a lot of things that are out there, liquidity in the marketplace that allows things to happen. And it's interesting. Ashley just I just put this up. So, do you think banks tightening mortgage criteria short term until COVID is over? I think there's two things. Banks normally, as a mortgage lender, and I used to run a mortgage company back in Australia in the day, 20 odd years ago. When things got tough, we would tighten our criteria. When things got, when house prices were going up and our risk was less, we'd loosen criteria. So you can say, well, that's because of COVID. Yes, and I think definitely. But I think the other side is we're in a recession. So they're naturally going to tighten. And they're naturally going to be checking. And I think one of the things you check, and we've already heard this, is that if you're working in hospitality or any of those sort of things which are getting hit directly, then your job may not be secure, and so they're making it harder and harder for you to get a mortgage. Okay, so it's about job security, it's about income, it's about tenure and all these sort of things. I talk about the 3 Ps of the property, the person, and the proposition, and they're really looking at all 3 now. Of what you're actually offering in the mortgage application in minute detail. Okay, which for me, I think actually it'd be really nice if they actually opened the lending up a bit and actually allowed this stuff to happen, because that would keep the wheels flowing and stimulate the economy, and especially if that was in the new build field. I'm a big one for new build, obviously, because that's one of my main businesses. That's what it does. But I love the stimulus effect that it has on the economy. If you want to get an economy out of recession, you build more properties. And in this case, residential construction, can lead you out of that, because that money gets to the base level, to the plumbers and to the carpenters and all those sort of guys, the tilers, the whatever, and then they go and spend it in the community, as opposed to putting it in top down, and it gets the top, and then that pays to buy the shares back and all that sort of crap, which we saw in the US, and it didn't work. Yeah, so do I think that tightening? Yeah, I think they'll tighten it, and I think as things get better, they'll loosen it as they establish their criteria. The other thing with the mortgage side is this. Yeah, right now they've come through a busy period where they've come from a slow period, and so they might have only had, let's say a company had 20 underwriters, all right, or 50 underwriters, whatever it is, okay, and they've been doing 2 mortgages a day, yeah, and all of a sudden now they get, so that's 100 mortgages a day they can handle. That's capacity. All right, and all of a sudden they get 500 mortgages a day in. Well, what's going to happen? All of a sudden they're going to start going, right, rather than judging here, which is our criteria, we've only got the funds to give out this many mortgages. We've only got the ability to do that many mortgages. So the rest of them, get rid of them. And I think that's what we're seeing, is a lot of the mortgages are getting declined. They're having to jump through more hoops. They're having to do all this sort of stuff. And that's natural, yeah? But I think what will happen is a lot of that lag where people have applied and perhaps are jumping through hoops, that'll come over, and that will probably tide us through the winter months. We'll see. But obviously they're going to have a willing buyer and a willing seller who are prepared to wait for that long. And especially if people are looking to move in. And one of the other complexities in the whole thing is the government now has put a 6 months eviction, they've put a 6 month eviction ban in, but they've also put a 6 month notice in for a no fault thing, which means you can't, if you want to sell your property, you have to give 6 months notice. So what do? Do you give 6 months notice? And this is the other thing, and I should be talking about this in the lettings thing. And in fact, we'll leave it at the lettings thing, and I'll explain it, because I'm going to go through that. Because it is a serious issue, yeah? But yeah, what do I think? Jobs right now aren't really, they're on the horizon. I'm tracking them closely. But for me, things aren't that bad right now. Okay, so that's quite a good thing. The interesting thing is, look, all these guys are saying house price drops, house prices are okay, house price growth, all this sort of stuff. But, in my book, How to Predict House Prices, I think I've got there, that book there. Can you see it? No, there. how to predict house prices. You can download that. If you go to the the Gladfish website, you can actually download it. But basically, I talk about experts and I track experts over a number of years. And what I proved was that most experts are wrong most of the time. In other words, they make a prediction this year and then next year they're wrong and the year after they're wrong. Yeah, but we're naturally attuned right from the word go of kids to listen to the opinion of experts. And really, that can lead us into a lot of hot water. So be careful what you're reading, whether it be house prices dropping, house prices going up. Actually, in a lot of areas, we've seen house prices do nothing. They're still exactly where they were. Yeah, because a lot of people are dealing with the averages, not the exacts, and I think that's important. Yeah, house prices and that. I mean, it's interesting. One of the fears that I have is that if Trump gets in, okay, and I think, look, if Trump gets in, that's going to really be a pain in the bum because he's going to pick fights with China. He's going to undo all sorts of relationships, and he's just such a divisive character. But I mean, right now it's looking like Joe Biden is going to get in. Now, to be fair, I'm not a big fan of Joe Biden either. I think change is needed in the US if they're going to sort of do anything. I mean, they're still very powerful in that. So I think, to be fair, this poll, and most polls are showing that, even Fox News is sort of, on that thing, which you think that they'd be Trump. So actually, it looks like that's the best outcome we can hope for, I think, is to get rid of Trump. To keep him in, I think then really, you've got a guy in there who isn't doing the job, and that's a concern for house prices in the UK and for the economy in the UK, because he's the guy who's going to be, negotiating Brexit with us, a deal with Brexit and all this sort of stuff. And you're just going to get this level of arrogance that I think we just don't want, So I had I had an email come in to our webinars. And basically, so first-time buyer, recently accepted an offer on a 2-bedroom mid-terrace in a London commuter town, currently rent, and given the recent events, worried about the drop in prices of recession. Mixed advice whether to wait 6 or 12 months and buy after prices drop. Now, interesting there, what's the advice? So interesting with this, so great question, because a lot of people are asking this question. Now, there's a couple of ways to answer this, and look, I can't give you exact advice without knowing your exact details, but from what I can see, you've got a couple of choices, okay? And we'll go through these a little bit later on, but the bottom line is with this whole thing is that you can actually, you can wait, you can go forward, or you can basically, ride the wave, yeah? Now, let's get a bit deeper. The key to, I think, all this is what I'll cover in the Brett's Rant segment, because I think this is one of the key things here. And I think if we understand what goes into house price drops and lowering, obviously he's made an assumption there, and buy after prices drop. So there's an assumption that prices are going to drop. Yeah, I don't think that's a necessity. I don't think it depends on a lot of external factors, as I've said. So for me, it's one of these sort of things where you go, actually, it depends on for me, first home buyer, you're buying your own home. So for me, it's not necessarily about the price, it's about finding the ideal property. And if you can get the right property now, then take it, But expect prices possibly to drop. But then if you're buying in a good area with good fundamentals, they're likely to come back, So we'll get into a little bit more, because this is one of the topics that I want to cover in my rant a bit more deeply. So guys, just any questions you've got, make sure you type them in the thing, and I'm happy to answer them as we go. Cool. So Brexit segment. So good. So Brexit. Not a lot on Brexit today. I was going to. There's a whole heap of articles. Interestingly, there's an article come out. It was only come out about 3 hours ago, actually, about the fact that one of the key negotiators and the Brexiteers has said, "Hey, Italy will be to follow. Mark my words." And I think that is a fear and from what we've seen so far with Brexit, it hasn't been anywhere near as bad as what it could have been or what it was predicted to be. And I think when you look at that, you go, hold on a sec, if that's how Britain has done it, then why can't Italy do it that way? Because let's face it, their economy is a basket case, and the EU bloc is a basket case, I think, too, because they're unable to control their own currency. And one of the master strokes, or a stroke of luck, or whatever we want to call it, was the fact that we kept the pound. If we had been subject to the euro, we probably would have been as screwed over as the rest of them, because it really is a two-speed, and in fact now it's a multi-speed with, the losers and the winners. And there's obviously resentment, but the winners control really the EU, and the losers have got to put up with it. So, how do they get out of that? That will be a real thing. But interestingly, a couple of years ago when Brexit was first, in fact it was before Brexit was first mentioned, people were talking about it, and I remember they hadn't had the vote yet, but I actually did some research, and there's been 109, and I may be wrong on that figure, but it was over 100 trading blocks throughout history. And some of these ones lasted 100 years and then fell over. So don't think that just because the EU is a post-World War II thing, that, and actually from what I understand, it was a Hitler idea, believe it or not. But don't think that it's going to last forever, because it may not. Coming back to Brexit and the impact on us, there's a lot of news coming out about 7,000 trucks sitting there for 2 days at the border crossing and all this sort of stuff. And I think that, potentially could happen. They're saying that it's not, the software will be ready. But I think any new system, if you go from one system to a new system, there's a bedding in period, yeah? So, there will be some trucks sitting at the thing. That will happen. But I imagine it will sort itself out. And most things have sorted themselves out. But certainly, the interesting thing I find, Boris is really playing hardball with the EU, and I think the EU is realising that he's not going to budge, which is actually quite a good, strong negotiating position to be in. Now, yeah, he may be breaking some international laws and things like that. There's some question around that. But I think, to be fair, right now we're looking pretty good. I think they'll have an 11th hour deal come out, because neither party can afford not to have a deal of some sort. But we signed the deal with the Good Friday Agreement, and the Northern Ireland and all that sort of stuff. And I think that's always going to be a sticking block, and let's not get into that, because that'll confuse the hell out of us. But it's certainly continuing on the path as not being as bad as as everyone made it out. So yeah, Brexit, it's coming to a home near you at the end of the year. But look, so let's move on. So lettings and I think with this segment, there's so much going on right now, and actually, from a landlord's perspective, it can get on top of you. And I think the key here is, and there's some good news this week, which is that the evictions have restarted. Finally they've restarted, and it's interesting because I just pulled this story off, and this story is about. It was in two parts. The first part was about a tenant who complained about heating and then got sent the eviction notice straight away. Well, you know what? The reality with that is that could be a retaliatory eviction, which makes it very suspect as to whether that was actually the case, or whether there was something else, or whether there was other motives to the landlord. They didn't say what the landlord's case was. But then they've got this landlord who just happens to be at the bottom, well below everything else, saying, she's basically had no rent because of the lockdown. And the government should have done something about it. And I totally agree. There are people like this, her name's Candy, who are sitting there not getting rent and cannot do anything. They have no legal rights to do anything. They're sitting there. And that's been for 6 months. So it's great that it finally has opened up. It opened up this week. We've got Nightingale courts. Apparently they're working quicker than they expected, but to be fair, they were talking about doing like 4 cases a day, or I think it was 6 cases a day per judge, which was just, going to take forever. Generation Rent, interestingly, has been out saying there'll be 55,000 evictions, coming, this, and it'll be an evictions nightmare. It turns out that they've been caught out. They actually based their figures on 13 respondents. That's with the problem with Generation Rent, and it is the problem with a lot of these shelters and Generation Rents. I don't believe that they're backed in facts. They get, I think I read that Generation Rent get 113 million from the government to lobby on behalf of tenants. I don't see the equivalent going to an ALA, Property Mark, National Landlords Association, any of those guys, which, for me is amazing because it really does stink. And right now landlords are getting such a raw deal. It's unfortunate, but we have to put up with it. The reality is there's a lot of disruption now, but eventually we'll come through the other end and actually we'll get back into making money and once all this compliance and all that sort of rubbish and garbage is done. And I think that's the key. It will turn around. It ebbs and flows. And as I said with the mortgages before, they constrict and then they relax. They constrict and relax. We're just going through a period where we're moving from being, accidental landlords into professional landlords. And if you're not going to be a professional landlord, then you probably need to consider getting out or hiring someone like EasyTrack, my company, who will do all the compliance for you and get everything done for you and back you up on all that sort of stuff, so you don't have to worry about it. The whole idea behind it is that it's effortless. And if you get a really good agent that's qualified, keeping up to date, that's the problem too. Finding really good agents that are qualified and actually keeping up to date with the market with all the changes, it's bloody hard. We're constantly training. I'm doing constant videos, to my team, updating them on stuff, interpreting stuff and showing them how the reality of the courts operate and how you've got to present evidence and all these sort of things, because you've basically got to become a lawyer now. It's got that bad. So what are some of the solutions? Look, if you're sitting there and you've got a property, they're not paying the rent, or you've got, you want to get access to your property to sell it, or all this sort of stuff, then really the three biggies, I think, right now, look, yes, you can do your Section 21 notices for 6 months, or 6 month notice, or those sort of things, Section 8s, but, don't hold your breath on those, because anytime you've got to go to court, it's going to take long, a long time, and they're prioritising cases now, which, we'll see how that goes. It could work out really well, and they could fly through it, but I don't know. So mediation, I think mediation is one of the things, which basically is a way of saying to the landlord, unfortunately, you can go down the law route and it's going to cost you this much, or you can just give the tenant some money or give them from rent-free to get them out of the house, so you can get access to it. But either way, you're probably going to lose some money and not be able to get that back. So mediation is one of those things, and that's the reality now. And it's better in some ways to get the mediation happening and maybe lose $500 than you have to go through the courts. And we've got one at the moment that we think is up around £85,000 in losses between legal fees and all that sort of stuff. It's appalling, that one. I'm actually going to put that. I'm speaking to Paul and who at Landlord Action to talk about his TV show and see if we can, because it is absolutely appalling. And I feel sorry for those landlords, because that's a lot of money, to be losing. Anyway, so the other thing is rent and legal insurance, and I think that really is a key. If you haven't got rent and legal insurance, then, and certainly if you're tight on your finances, and if something serious happened and the tenants stopped paying or refused to move out, or you had to go to court, any of those sort of things, then you're better to get the rent and legal insurance. And in fact, even I'm putting my properties for rent and legal because I just don't want the hassle. I don't want to know, this is going to take 6 months to get them out, this is going to take 8 months to get them out, and then lo and behold, something happens like COVID, and they get another 6 months in the property. Meanwhile, I'm paying the rent, because the likelihood is I'm not going to get it back from them. Yes, I'm going to do a money claim online, and I'm going to ruin their credit because they're not going to pay me back. But that's my legal right, and I'm going to exercise that, and I am exercising that now, and encouraging landlords to exercise that, because that way, when they go for another reference, it'll show up, and then the next person doesn't get it. And if enough of these bad tenants do that, then eventually the message gets out that we're not to be screwed around with. And I think that's key. Finally, guarantors for all tenants. Obviously, if you've got an existing tenant, you can't, but asking for a guarantor on all tenants. And if you do that, then the likelihood is you can go to that tenant and say, hey, we're about to, do this and go legal, and we, if we can't get it off that, we're coming after you. And if we do that, that may well be a thing. Look, one of the key things I think here is the sales. Traditionally, the market in the UK is that they want vacant possession, which means they want the tenant out in order to sell, or if you're going to buy it. And solicitors love the vacant possession. They want vacant possession. That's going to be disrupted, because here's the problem, is if you have to give 6 months notice and then you sell it in that 6 months, and you arrange for completion, say a week after the person's supposed to move out, and they don't move out, and it takes you 4 months, you're going to lose that sale. Yeah. So all that time is gone. Now you've got 6 months, and now you've got potentially another 4 months to get the person out, maybe 6 months. We don't know. Where you're getting no rent, and now you've got to find somebody else to buy the property or to hold that willing buyer for that period. It's just an appalling system, and there seems very little interest or very little understanding. I think Westminster just doesn't understand this sort of stuff, the trials and tribulation they're causing of small landlords, and it is quite appalling. Cool. So let's get. So my rant for today is pretty much around what do you do? House prices, what are they going to do? What's going to happen? So look, do you buy? Do you that? Look, prices. I think I've put 2 choices, but I've actually put 3 there. They're either going to drop. Then the question is by how much, yeah, or they're going to sit stagnant, not do a lot. And stagnant might be plus or minus 2 or 3%, whatever. Or they could rise. Now, I put rise there. I don't think there's a lot, but some areas could rise, yeah, and are likely to continue rising. They'll be the areas that have the best fundamentals, yeah. And the question is, so I think with this here is really what are house prices going to do now, or what they're going to do is they're either going to drop or they're going to sit stagnant. I don't see them really rising over the winter, because we're talking through to say March next year, all right? But the interesting thing is, then the question is, oh wait there, what happened there? Oh yeah, then the question is, you got to think short term, what are they going to do, and then long term, what are they going to do? Because I think short term over the next 2 years, which is probably the recession that we're going to have, and will persist, because you don't just come bounding out of the recession. I don't think there's going to be a V-shaped massive bounce in house prices. I think certainly for next year things are going to be slow, because as unemployment increases, and it's unemployment's increasing, so that's going to slow the economy down. The stimulus may change all this. It may actually keep house prices growing. We can see, but I think the reality with that is we look short term and then we look long term, because the long term side of things may well be we see house price growth, but we may well see inflation, which means our interest rates have to go up, so then our cash flow could be affected. So you've got to look at this, and that's, if you're not sure about what I'm talking about here and you're going, oh Brett, I don't understand, then the best thing to do is to sit down with a team and actually get a plan and talk about how your strategy can meet the market, because that's the key. I mean, so much of this business and so much of this industry is about, you show some interest in investing, and then they say, right, have I got the property for you? It's the worst thing you can do. The best thing you can do is stop, get a strategy, understand where the market's at, and work that out. And then once you've got that, then go out and look at the investment opportunities that are out there. And when you do that, you can have effectively a key selection criteria. I mean, we're treating it like a business, and you have to treat it like a business. And I think that's the key here to really being successful. So yeah. So Ron just saw. And I love this comment, from Ron. So he's increased his portfolio from 4 to 8 this year. Long-term game, and I couldn't agree more. If you're short-term, my only condition on the long-term game is that you've got to buy in places that have the best fundamentals now, because the problem now with the UK is everyone's moving to the cities. Now, some people are going to say, no, they're not moving to the cities, they're moving out. And there's going to be a resurgence, but there's just not the investment going out in those areas. Oh, yeah? So some of those areas around the UK have done nothing for 10 years. Austerity has hit them, Brexit's hit them, and nothing is happening in those areas. So if you're buying there, you either need to play the yield game, which is fine, but in some of those areas, the yield isn't even that impressive, okay? Whereas, your cities will get more capital growth, but look, yeah, I agree, 100% long game. If you're trying to get in and out and flipping and all that stuff, that's just rubbish right now. Don't even try it. Don't get fooled by it. So yeah, but yeah, well, congratulations, Ron. That's awesome. Yeah. So Paul. So will this make it harder to sell tenanted properties? I think there's a couple things here. I think yes, it's going to make it harder to sell tenanted. I think short-term, tenanted properties are still going to be harder, because the mindset of people is that they need to get the tenant out. But I think what's going to happen is, in a lot of other countries, selling a tenanted property is fine. No problem. In actual fact, the key to buying a tenanted property is making sure that you get the AST and making sure the AST is correct. Because the problem is that if it's missing stuff and they can take advantage of that, you wear that once you own it. So get the AST, check out the tenants, get the referencing, get all the details before you buy. And that's what I'd say. Is it going to make it hard to sell? I think short term it's going to be hard because obviously now we're like 6 months and we'll have these issues and that. I think long term people will start to get used to the fact that, no, I'm selling it with a tenant in it. Yeah? Because let's face it, the government's trying to keep tenants in properties. And actually, they're not really. What they're trying to do is let the tenants rule when they come and go. Yeah? Because the tenant can give notice. They don't have to give 6 months notice. So that's not the case. That they still are under the same terms that they've always been, which is, they give 2 months notice or a month's notice or whatever it is, depending on your AST. So I think the key really is the market will adjust. Yeah. So I don't think it's going to be necessarily harder, maybe short term, because people are of the old mindset and now all these rules have changed it. But I think eventually people start to realize that this is how you work around it, this is how you get around it, and it'll be fine. Look, 3 things you can definitely do now. All right, from a house price, from buying, if you're going to buy a property. Number one is expect to ride the wave. In other words, if it's going to go down, buy what you want, buy the best property now that you can afford in the best area that you can afford. And when you do that, okay, then expect that if it goes down, you're just going to ride it down because it will come back down. The other thing, buy with fundamentals. And I think this is, what I mean by best fundamentals: shop, skills, transfer links, major employment, major investment. And when you do that, these are the properties that bounce back the quickest. Yeah, or I think the other option is that you wait it out, but how long are you going to wait it out for? And I think that's one of the keys here is, are you going to wait 6 months, 12 months? Are you going to wait until house prices are growing at 5% a year? Are you going to, one of the problems I have with this waiting game, okay, is that it's an excuse for procrastination. Yeah, I can tell you, there is always an excuse not to get started. It is always. I've never been in a market in 25 years of being in this market, in property, been in a position where I can honestly say everything has been perfect. I mean, I remember buying my first property. I was scared. I won't say the yes word because I'll probably get the explicit rating on my thing. But no. The key here, I think, is don't worry about the negative. Minimize it as much as possible. Get your strategy right. Make sure you're not overcommitting yourself. If you have to, allow for interest rates to go up, allow for the house prices to go down. Look at your job and make sure it's secure. And if you do those things, then get involved. And I think but obviously you can negotiate the price based on what you think is going to happen. And when you do, this is all we do as a business, is we negotiate the price based on what the market's doing and what the market's likely to do. Yeah. And unfortunately, right now, a lot of developers really are sitting there going, well, actually, we've come from a really low base. We haven't added huge staffing or anything like that costs. So actually, we don't have to drop our prices. So that's keeping prices up. And a lot of people say, oh no, but I want 10% discount. Well, you're not going to get 10% discount. You've got to be realistic too. And if the market doesn't work for you, then fine, wait it out. But my concern is, how long are you going to wait for? Because and I'm happy. I sit down with lots of clients, and what I say is, you got a 3-month procrastination rule. If you don't do something within 3 months, then you're procrastinating. Yeah, because in 3 months you can do the research you need to do. You're not buying on impulse, and then the great thing is, you can get to a position where you understand, you have the level of education you need, and the emotions in check, where basically you can go forward and invest confidently. That doesn't mean the house prices aren't going to drop. If you're, as Ron said, long-term house prices are going to drop. So you are going to have to be used to it. Yeah. Anyway, that was a bit of a longer rant for today. So guys, any final questions you've got, pump them through. If you're not, you can always put them through to webinars@gladfish.com, and they'll come through to me, and then I'm happy to answer those questions. At any stage, when they come through or whatever. I generally jump on my YouTube channel and I'll do a thing. or I'll answer them in this forum as well. So guys, thanks again for this week, and we'll see you again next week, same time. But yeah, any questions, send them through. But don't forget, if you're watching, subscribe, and more than happy to answer those questions. Comment, have discussions, get any feedback on what you're thinking, or what your thoughts are on where you think property might go. Because it's, as I said, most experts are wrong most of the time. That includes me. It doesn't mean that just because I sit here and act like I'm certain about what's going to happen, you just don't know. I know from 25 years generally where things go, and I try and pick where things are going. And I often find that, they're not as bad as everyone makes them out, or if they are bad, you can pivot if you've got enough understanding to make it work for you. Yeah. All right, guys. Well, that's it for this week. Thank you very much, and we'll chat soon. See you later. Bye.